Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, hope you had a good day out there. FOMC reaction day, and here we have our 12-hour time frame on the S&P 500 futures, which we have been watching. And while we did break the actual price level, it was very insignificant, and I'm calling that a triple top rejection. And the way to not be faked out by that break was to be watching QQQ in the tech sector, because we know if the tech sector is not coming to the bull party, that bull party is not going to last very long. So we have a continued tightening range. There are names that are range bound. There are names that are not range bound. We've got Penn, DKNG in the sports betting sector coming off of all-time highs. They're not range bound. We've got Tesla not range bound after massive moves in both directions. We have a lot of range bound names like Apple, Amazon, QQQ. So depending on your trading style, for me, as a day trader, I want volatility. I'm going with the names that are volatile and wide open as far as ranges, as opposed to the names that are just bouncing back and forth and choppy. So the S&P 500, from here, we're looking for a 12-hour higher low compared to 3309. The only thing that would have me looking for a bear break from here would be a massive bear volume day tomorrow during regular trading hours through most of the day. If that happens, then yes, we can just drop straight to a lower low, but it can't happen without massive bear volume. So in the absence of big bear volume, a 12-hour higher low is the most likely scenario, and we could absolutely tighten up within this range for another 2, 3, maybe even 4 trading days into early next week. So resistance rejection, and now we're looking for a higher low. And how much space do we have to work with? A good amount. Over 2%. We could drop 1.5% tomorrow and still be range bound. IWM. And one other note, I'm looking on social media, I'm looking in the chat room and everywhere, and this happens on the S&P 500, and everybody says, what did Powell say? And in my opinion, this has everything to do with technicals and resistance, and very little to do with what he's saying during his press conference. Yes, there are times where he could say things that we'll see reactions from bots and algos, but this is not an unusual Fed reaction as far as going in one direction and then a complete turnaround and going in the opposite direction. And again, the fact that it just happened right at our resistance zone is not surprising. IWM, solid follow through and almost getting back up towards recent highs. Upper wick of profit taking today, not immune to the market weakness at the end of the day, but holding on much better. It's an hourly uptrend, and the reason it's holding on much better is the financial sector closed up over 1% today. So having that exposure in the financial sector has hurt IWM as far as the size of the entire bounce on the COVID dump. We got QQQ, V-shape all-time highs, SPY V-shape all-time highs because of their tech exposure. IWM didn't get there because of its lack of tech exposure and its increased exposure or bigger exposure with the financial sector involved. So on a day like today where XLF is green, it helps. Bigger picture, it has been hurting. We'll be watching the hourly uptrend. If we lose it, we look for a daily higher low to form compared to 147.68. And we do need to be watching rotation. We know the tech sector has been weaker. Let's do QQQ real quick. So QQQ high, low, lower high, lower low during regular trading hours, pretty much a double bottom on the futures chart. Lower high again. And again, looking back down at that support. So let's look at it on the futures chart to compare it to the S&P 500 futures we just looked at. 12-hour time frame, similar. Bigger pullback, but definitely similar. Rejecting just under resistance. And now we're watching, can the bulls hold 10,924 for a higher low to try and form compared to that level. We're going to be watching right now. If the tech sector drops to a lower low, are all of our sectors dropping to a lower low? Or are we seeing funds rotate around? Are we seeing the airliners with bullish action? Airliners are in a solid uptrend and broke bullish today. Are we seeing cruise liners? Well, they had a bearish day recently, but overall, they're seeing some upside. Are we seeing the financial sector hold on? Today, yes. So one day doesn't mean anything. I need to see it last for a few days, if not a week plus. But that's what I'm going to be watching for. If the tech sector keeps seeing weakness, the number one question I will have is, are we going to see money leave the market, or are we going to see money leave tech and go to other places? And the COVID dump, obviously money was leaving the market. And since then, we have not had many instances, and the instances that we have been very short-lived, with everything going down at the same time. The dollar is going to remain an extremely important factor to me. We held support again on a bearish reaction to the FOMC initially, 92.70, 79, 78. Can the bulls change the trend? This is the million-dollar question for the next 2 weeks, however long it takes. Can we change the daily trend and get bounce follow through? If we can, I would expect QQQ and probably SPY to drop to a lower low on the daily time frame and continue weekly consolidation. If we cannot, and if we break 92.70 from here, it's still a weekly bear flag, and the broader market and the gold bulls and our metals and our cryptos will all hold strong. So for me, it's all about the king dollar still. Can we confirm the daily trend change or not? The answer right now is no, but it is a bullish defense of short-term support with lower wicks, and the next few days will be very telling. So XLF, we had a green day today, but it is fairly range bound as well. We've got 25.27 as a double top. Most important support, we've got 24.69 and 24.49. And again, for me, this is a choppy daily time frame. I find clarity on the weekly chart. 24.23 is the most important weekly support level for me, and the bulls are trying to follow through for a new weekly higher low at 24.49, but not convincing at this point. If we break that double top of 24.27, it will be a bit more convincing, and I will call our new weekly higher low and new key support level 24.49 from there. So we did QQQ. The biotech sector continues strong. Look at that follow through. This is just an absolute surge, changing the daily trend, and easily the strongest sector over the last couple of days. And just like that, we're looking back up at that 121.06 high. It's not that far away. We're talking about 5% from here, and that's the all-time high. After pulling back pretty much 19-20% from the all-time high, quick little news catalyst and a daily trend change, and a very notable shift in momentum. After 116.64, 118.46, and 121.06, tons of space for a daily higher low to form when this move tops out. SMH, consolidation, beginning. Anything above 164.47 is a daily higher low. So plenty of space to form a daily higher low, but again, not immune to the pullback. I would say it is most often correlated to QQQ, but definitely more bullish than QQQ over the last week of trading. And the VIX starting to shift, broke the pattern of a lower high every single day for the last 6 days, and now we're watching for a daily lower high compared to 38.30. The question is, how much follow through can the bulls get? Certainly not a very convincing reversal candle. Have we changed the hourly trend? The answer is, you could say we had a double bottom and then broke resistance, pulled back, certainly more than the bulls would like to see. So not convincing on that shift in momentum just yet, but bulls at least breaking the pattern of a lower high every day. We can see UVXY is still in a clear hourly downtrend at this point. So bulls have a lot of work to do in the volatility sector for some daily bounce follow through. So the dollar, we know it's all about the trend change. 92.70, most important support. We are 49 cents above that level. 93.66, most important resistance. We are 47 cents below that resistance. We are right in the middle of that range. Gold, rejected from the high of yesterday essentially. And again, range bound, condense it down to the 2-day time frame. We're just trading sideways and waiting for some guidance on the dollar. And it is possible to stay in this tightening range for another week plus. I thought we were going to get a break on the FOMC reaction. It wasn't a huge reaction. And again, if we form a lower high compared to 1992's and then pull back and form a higher low compared to 1906, keeping in mind every candle here is 2 days, could easily last another week plus. Silver is less clear, but very similar overall. 2-day time frame here, tightening up, and possibly a lower high compared to 28.90, with the most important support being 25, make that 25.84 from here. Range bound was the word of the day while I was doing my afternoon live stream for members, and there are a lot of things that are range bound on the daily time frame. Metals are range bound on the longer term daily time frame, but range bound is the way to describe a lot of trading instruments. Miners did get some bull break follow through, but we know we're not going to go that far if gold is not coming along. So on any daily consolidation, 40.91 will be our higher low of support. And bulls have a slight edge in these miners, but again, have to see the metals break bullish to be looking up at recent highs. Oil, big time follow through on its bounce. Bullish reaction to the oil inventory report. Very significant bounce. Still absolutely looking for a lower high from where we came from, but the size of the bounce is significant enough that we are going to be looking for a higher low to form once we top out. 4-hour time frame is getting real extended here, and I certainly don't expect it to be the case, but if we were to see tomorrow open with no 4-hour consolidation at that point, I would be scouting a bearish oil entry for that daily lower high. But guess what? Oil is likely going to be range bound for the rest of September. Whenever you have huge move in one direction and a significant retracement in the opposite direction, you know to be looking for the equilibrium. Natural gas, daily lower high looking set at 2357. 220 is a base of support, still holding, so we haven't confirmed another leg down yet, but we are on the verge of it. And this weekly consolidation is starting to be more significant than the bulls would like to see, and it's starting, if we break 220, rather than looking at continuation, we're going to be looking at a lower high on the weekly as the most likely scenario once that momentum does shift. Daily downtrend continues to be our guide as we test that support. So bigger picture, let's summarize. We know we are watching the 12-hour time frame on the S&P 500 futures and on the NASDAQ futures. We know QQQ in the tech sector, especially our major tech names, are on the weaker side over the last week of trading. We know that we're seeing other sectors hold on fairly well. It's not a race to the exit for the market as a whole. We know the dollar has to change the daily trend for bears to have confidence and follow through on market and asset pullbacks. And I personally would be much more comfortable as a bear if the dollar does change its daily uptrend, gain a daily uptrend, I should say. And if you are cash and watching this tightening range, what you want to see is the tighter the better. Form another higher low. Form another lower high. Go to mid next week before we get a break. Yes, it'll be boring in the meantime, but when we get the break, it'll be clear and convincing, and it will allow for good risk and reward entries based off of previous support or resistance levels. So I hope you had a good day out there. We'll check back in tomorrow and see if the bears are able to get any follow through. It will be notable if we open lower. And again, if you look at SPY, yes, this has been a common theme over the last decade, but when you're looking at this action, that is a bad circle job. When you're looking at this action compared to that action, you are seeing bulls control the vast majority of every day. We open and we close higher. And here's the exact opposite. The bullish action is happening during extended hours, and once the bell rings, the bears have favor. In the past 9 days, if you short at the open, you make money 7 out of those 9 days. If you go long at the open during this stretch, you're making money probably 18 out of 20, however many days. It is a notable shift. And this is a horse. That's his saddle. Better tail.
That's a carrot. I think we got to end there.